Time for Money9's daily market dose, Corporate Central, where we get you the everyday pulse of the corporate world and also take note of all the market fluctuations happening. But first, let's find out what took place in the corporate world today. The majority of Reliance Capital lenders on Monday agreed on equitable distribution of proceeds among assenting and dissenting creditors, a move aimed to discourage negative voting on the plan. Lenders expect a recovery of about 10,090 crore rupees from the sale of Anil Ambani promoted financial services company, which is below the liquidation value pegged at 12,500 to 13,000 crore rupees. As per the Insolvency and Bankruptcy Board of India, dissenting creditors are entitled to receive a pro rata payment as per the liquidation value, while the assenting creditors are entitled to receive money from proceeds based on the approved plan. This rule is aiming at discouraging lenders from voting against a plan. Nearly 99% of the lenders voted for equitable distribution of proceeds. The voting will be held next month. Meanwhile, Reliance Capital reported consolidated net loss narrowing to 1,488 crore rupees in the fourth quarter ending March 2023. The company posted a net loss of 4,249 crore rupees in the January to March quarter of the last fiscal. Its total consolidated income decreased to 4,436 crore rupees from 4,770 crore rupees year on year. GQG Partners, which invested $1.87 billion in 4 Adani Group companies in the first week of March, has pumped in another $330 million to $530 million into these companies, and since then demonstrating the investors' continued interest in the group. On 2nd of March, the Adani Group had disclosed that GQG had invested 15,446 crore rupees across flagship Adani Enterprises, Adani Ports, Adani Transmission and Adani Green Energy. Meanwhile, shares of Adani Transmission fell almost 5% on Tuesday after the Adani Group company posted an 85.4% rise in its consolidated net profit at 439.60 crore rupees in the January to March quarter. Profit jumped 85.4% year on year, helped by higher volume from 237 crore rupees in the same quarter the previous year. And also, the Congress party has alleged that 2 offshore Adani-linked funds appear to have been on the radar of Indian tax authorities since at least 2014, with no action evident other than 1 or 2 routine notices, as it reiterated that only a JPC can unearth the truth into the whole matter. And in the ongoing process of the formulation of a revival plan for Go First Airlines, the company's top executives have reportedly discussed the revival plans with DGCA officials in Delhi on Monday. The cash-strapped airline is trying hard to come out of the situation and resume its operation. Last week, the DGCA asked the grounded airline to submit its revival plan within 30 days. As of now, the flight operations are suspended till May 30th, and also around 200 pilots of Go First, the cash-strapped airline that suspended operations on May 2nd, have joined Air India. As many as 75 of them started a training with the Tata-owned airline on Monday onwards. Meanwhile, bullish on growth prospects with a healthy start to Air India's 5-year transformation plan, its chief Campbell Wilson on Monday said that the airline is hiring 550 cabin crew members and 50 pilots every month, and also expects to have 6 wide-body A350 planes in its fleet by the end of this year. Abu Dhabi Investment Authority is in talks with Aditya Birla Group, and these talks are related to investing around 1,200 to 1,500 crore rupees in Aditya Birla Health Insurance, a company related to the group's health insurance business. And according to the data of IRDA, Aditya Birla Health Insurance is one of the 5 most active health insurance companies in the country with 14% market share. Apart from ADIA, select sovereign wealth funds of the world are also interested to buy stake, for which talks are likely to start in the coming few weeks. SWFs are eyeing to buy small stake in Aditya Birla Health Insurance through this deal. On Monday, Gravita India promoter Rajat Agarwal sold 3.2 million shares, which is equivalent to 4.6% stake in the company. As per the block deal data available on NSE, these shares have been sold at an average price of 565 rupees, which makes the value of the deal at 180.80 crore rupees. The data shows that from the promoter side, the sold shares have been bought by 4 subsidiaries of Nomura Holdings. Out of these, MTBJ account Nomura India Invest Funds holds 1.5 million shares. Nomura Trust and Banking Co holds 7.5 million shares. Employees Provident Fund Board managed by Nomura Asset Management Malaysia bought 5.5 lakh shares and Nomura Funds Ireland Public Limited Company bought 4 lakh shares. Sajjan Jindal-led JSW Group plans to sell stake in JSW New Energy, and through this stake sale, the group plans to raise $500 million in which minority stake can be sold. JSW Group has appointed Standard Chartered Bank as an advisor for this part sale. Let us also tell you that JSW New Energy is another company of JSW Group, that is, it is JSW Energy's associate company. TPG's Rice Fund is one of the interested bidders for this, and this fund invests in companies related to clean energy business. Earlier, this fund had invested $1 billion in Tata Motors EV, that is electric vehicle business subsidiary. The country's third largest telecom company, Vodafone Idea, which is struggling with a lack of funding, last week indicated that talks to raise capital would go ahead, but analysts believe that the new capital may come in the form of debt instead of equity. In fact, according to analysts, investors are afraid that after the moratorium on regulatory dues ends, equity dilution means that their equity share may decrease. In simple words, analysts see the government's dues being converted into equity twice. Estimates are going on continuously, and if new investors take equity stake in the company now, then there may be a reduction in their share when shares are issued to the government, which is called equity dilution. Let us also tell you that in September 2025, Vodafone Idea's moratorium is ending, after which Spectrum and AGR dues will have an annual liability of 43,000 crore rupees and will have a gap of 30,000 crore rupees. The list of Indian startups that have been slashed in valuations by US investors in the recent months is getting longer and longer. The latest case in this episode is unicorn edtech startup Eruditus, whose valuation has been cut by 9%. Prior to this, valuations of unicorn startups like Swiggy, Byju's, PharmEasy have been reduced. By the end of March quarter, the valuation of Eruditus has been reduced by 9% to $2.9 billion by an American fund named the Private Shares Fund. Earlier in August 2021, the valuation of Eruditus was estimated at $3.2 billion by this firm when the Private Shares Fund bought 0.2% stake in Eruditus. And that was all about corporates. Now let's take a look at those market stocks that were in highlight today and also analyze the reason behind it. First up, despite the strong results of the fourth quarter, IRCTC stock has seen a decline of up to 3% on Tuesday. There are two main reasons for this. Firstly, the company's results in the fourth quarter have been in line with the market expectations. The company's year-on-year profit in quarter 4 has increased by 30.4% from 213.8 crore rupees to 278.8 crore rupees. Company's income increased by 39.7% from 691 crore rupees to 965 crore rupees. Working profit increased by 16.5% from 278.5 crore rupees to 324.6 crore rupees. But there is a dip in the margin. Operating margin declined from 40.31% to 33.64% year-on-year. In fact, this is the second reason behind share fall, and margin decline is due to a decrease in the contribution of internet ticketing to overall revenues. Internet ticketing has contributed 30.5% to the overall revenues during the quarter, which was 42.2% in the same period last year. This is the reason for the decline in the margin of the company, which has led to the disappointment in the market. Experts believe that the fall in the stock is a good buying opportunity and that the stock can bounce back from here. 605 rupees level is a strong support for IRCTC stock and a tough resistance at 650 rupees. On crossing the 650 rupees mark, the stock may turn bullish in short to medium term and can go up to 727 rupees. ISG Heavy Engineering stock rallied up to 18% on Tuesday, and the stock touched a high of 634 rupees during the day, which is also a 52-week high. The company's quarter 4 results have actually been excellent. Year-on-year profit of the fourth quarter of the company has increased by 2.3 times from 37.6 crore rupees to 86.1 crore rupees. Though income grew only by 28% from 1,596 crore rupees to 2,043 crore rupees, the performance at operating level is strong. Operating profit grew by 54.6% from 106.5 crore rupees to 164.7 crore rupees, and margins have also improved. Working margin has improved from 6.67% to 8%. Jubilant Pharmova shares saw a sharp decline of up to 10% on Tuesday. The stock had touched a low of 322.9 rupees during the day, and the reason behind the fall was the disappointing fourth quarter results. The company has turned from profit to loss in the fourth quarter. It incurred a loss of 97.8 crore rupees during the quarter as against a profit of 59.5 crore rupees in the same period last year. Although the company's income has increased by 9.7% year-on-year from 1,514.4 crore rupees to 1,660.9 crore rupees, but the working margins have broken. Working margins have come down from 15.5% year-on-year to 12.2%, and actually the reason behind the loss during the quarter is the impairment charge or impairment loss of 171 crore rupees taken on some intangible assets during the quarter. Apart from this, US drug regulator US FDA has also given the status of official action indicated or OAI, which was investigated in February 2023 to the company's contract manufacturing organization, that is CMO facility of Montreal, US. This has also affected the sentiment of the stock. Due to this step of US FDA, the approvals from this plant can be stopped, and that means that the future income can also be affected. Also, the management of the company is also changing with effect from May 31st. The current managing director, Hari S. Bhartia, will resign from his post. However, he will continue to hold the position of co-chairman and non-executive director on the board. And after a strong performance in the fourth quarter, Force Motors shares hit an upper circuit of 20% on Tuesday. The stock also touched a 52-week high of 1,718.70 rupees in intraday. In fact, in the fourth quarter, the company has registered a profit of 149 crore rupees, whereas in the same period last year, the company had a loss of 40 crore rupees. Strong growth has also been seen in the sales of the company, and the company's sales have increased by 70% from 881.3 crore rupees to 1,490 crore rupees. Working margins stood at 10.65% as against 0.86% in the corresponding quarter of the last year. Increase in prices and reduction in steel prices have resulted in reduction in cost, which is reflected in the margin as well. Due to the strong performance in March quarter, the company has declared a profit of 152 crore rupees for the whole year, that is FY23, whereas in the last year in FY22, the company had a loss of 74.6 crore rupees. And that's all tonight on Corporate Central. But before we take your leave, leaving you with some important corporate events and triggers which will have the potential to make big market impacts. First up, on May 30th, impact of US House Price Index numbers and US Consumer Confidence numbers in the market. And moving on to May 31st, India's GDP for fourth quarter will be out. Also, RBI will review monetary and credit information. And Anil Agarwal to address Vedanta shareholders on May 31st. And also, Macrotech Dev goes ex-bonus on May 31st. And on the same day, SBI share goes ex-dividend as well. Changes in MSCI after market closing on Wednesday, and Adani Total Gas will be out of MSCI, while Max Healthcare, Sona BLW, HAL will be included. On the global front, ECB to review Europe's financial stability on May 31st. That's all on Corporate Central tonight, but you can catch all the other detailed updates on the corporate world on Money9's website, www.money9.com. That's all from me. Take care and see you tomorrow.